We'll be back from the break, and this is Smart Links Business, and we're crossing over to Karibu, East Africa. But before we do cross over to Karibu, East Africa, you can definitely invest in the Ugandan financial market space by using the Zabo platform. Use the USSD code *292#. Follow the prompts, and it's going to be very easy for you if you want to invest in bonds and securities. Well, Zabo, a platform by Altex East Africa, says you can do something new today. If you want to register, use the USSD code *292#, open up with a NIN, that is opening up your account with a NIN, and definitely learn more about the available products and the bonds. Select a preferred maturity period for your particular bonds, and select a preferred bond with a minimum of 15,000 Ugandan shillings if you want to kickstart off your investment journey. The markets open at 8:15 a.m. and closing time is 3:15 p.m. East African Standard Time. And please do note that these markets are closed on public holidays and during the weekends. Now let's head to Nairobi, as the investors on the Nairobi Securities Exchange have lost 777.83 billion Kenyan shillings. That's approximately $6.37 billion of wealth in 9 months, as the value of listed firms has flagged by 28% between January and September, amid a persistent bear run on the struggling bounce. Now, the central bank's monthly economic data shows that the bounce's market capitalization fell to 2 trillion Kenyan shillings, that is approximately $16.39 billion, from 2.7 trillion Kenyan shillings, approximately $22.7 billion during the period under review. Now, with the situation compounded by the massive exits by foreign investors, according to CBK's monthly economic indicators report of September, the foreign investors' participation on the bounce fell to 35.92% from 49.92% of it. Now, the Nairobi Securities Exchange is bearing the brunt of rising inflation, growing interest rates, depreciating shilling, general investor apathy, a lack of new listings, poor performance of listed firms, and the massive layoffs by international investors. The foreigners are liquidating their investment in emerging and frontier markets as a result of risking of the rising interest rates in the US and Europe, and then the other geopolitical tensions brought about by the ongoing war between Russia and Ukraine. Kenya is facing difficulties attracting foreign inflows after foreign investors dumped shares worth 19.54 billion Kenyan shillings, that is approximately $160.16 million, in 9 months to September, amid concerns by the New York-based Morgan Stanley Capital International on the country's deteriorating investment environment. Mid this year, when you look at this particular one, the Morgan Stanley Capital International on the country's deteriorating investment opportunity, mid this year, the Morgan Stanley Capital International put Kenya on a watch list of troubled markets unit for that is unfit for foreign markets and foreign investments, alongside Nigeria, Mauritius, Egypt, Sri Lanka, Brazil, and Qatar. In its latest market review report published in June, it also highlighted difficult investment conditions that have hampered foreign investment in Kenya. These include the biting dollar shortage that has made it difficult for the foreigners to carry out their trading operations, compounded by depreciating shillings, leading to a rise in the forex deposits. According to the report, the Morgan Stanley also raised concerns regarding how the Kenyan government imposed foreign capital repatriation restrictions by demanding certificate of the foreign currency inflow before allowing foreign investors to send home their investment earnings. In June, the Nairobi Securities Exchange 20-share index, the benchmark index, fell below 1,700 for the first time in 20 years, indicating muted activity and free fall of prices on the 68-old stock market. And of course, posing a threat to the East African community stock markets at large as well. Now, switching our eyes, we head to Tanzania, where the Tanzanian Ports Authority has hired Indian firms to replace the Tanzania Ports Authority just in a period of a few days into the year. Now, the Tanzania Ports Authority had a 5-year lease agreement that expired on September 30th in 2022, but it was extended for another 3 months to give the two parties more time to discuss the possibility of renewing the contract. The Tanzania Ports Authority has outsourced operations on a private company that will operate berths that were previously served by the Tanzania International Container Terminal Services, the TICTS. So the Indian conglomerate of Adani Ports and Special Economic Zone Limited will now run Bath 8 through 11 of the Dar es Salaam port on behalf of the Tanzania Ports Authority, which took up the services yesterday after the contract ended. Now, TICTS had been handling containers at the 4 Bath, but Tanzania Ports Authority terminated the contract after the two sides failed to agree on renewal of the terms. So the TICTS have had a 5-year lease. The TICTS are the Tanzania International Container Terminal Services, have had a 5-year lease agreement, which did expire on the 30th of 2022, and then they extended their stay in charge of the port operations for 3 more months. Now, apparently, the deals and agreements and the discussions they had with the Tanzania Ports Authority did not come out to a good cause. So Tanzania then decided to go with an Indian conglomerate in Adani Ports to manage the 8 berths at the Dar es Salaam port. The Port Authority took over management of the berth on Sunday, January 1st, but it has contracted the Indian company to do the job on its behalf. Now, the Tanzania Ports Authority Director General Placidiusi Mbosa said that the authority had already started handling the containers after retaining these particular Tanzania International Container Terminal Services. So you can have all of what is coming in there from Tanzania. The TPA hires Indian firm to replace the TICTS in that particular space. Well, and as we cross over to more coming in from the East African Community region with Karibu, East Africa, we switch our eyes to the tourism and hospitality sector in Rwanda, which is recovering steadily according to the latest report. Now, the tourism and hospitality players are optimistic that the sector will continue to grow in the new year as the country shakes off the COVID-19 impact that greatly affected the sector. So even before the year came to an end last year, and of course we've ushered into 2022, the country had already surpassed the number of events and conferences it hosted last year. Now, many of which were high-profile global meetings in regards to how Rwanda was able to have this particular one. Up to 87 have been hosted in the country's different amenities, and one of them being the Commonwealth Heads of Government meeting, CHOGM, that happened before the Queen of England, Queen Elizabeth, passed on last year. Now, besides CHOGM, which was attended by 4,000 delegates, other big international events like the International Telecommunications Union General Assembly, the Mobile World Congress, the International Conference on Public Health in Africa, Protected Areas Conference last year, the country hosted 86 conferences that attracted 18,400 foreign delegates and generated up to $38.5 in revenues. But the government expects to far exceed these numbers this year, with growth even expected to be much higher in 2023. Now, the country has set its eyes on full recovery of the Ministry of the Ministry of Tourism, conferences and other sectors in there from the hospitality point of view. And of course, they are looking at even hosting a bigger number of delegates who will stay longer in the country. Now, although actual numbers of total delegates and revenues generated in 2022 are yet to be released, there are signs that the revenues will even exceed pre-pandemic levels if they continue to maintain this steady progress. Now, besides being a standalone product, the growth of sports tourism has added value to the existing products. Now, for instance, the Kigali Golf Resort and Villas and other sports amenities like the BK Arena, the Gahanga Cricket Stadium have added value to the country's tourism. And also looking at last year, sports tourism alone generated over $6 million, accounting for 13% of the total generated revenues and from the sector. Now, the Rwanda Tourism Board announced that the revenues from gorilla trekking grew by 25% this year by August, and then also the country had collected up to $82 million from gorilla. And speaking of sports tourism, how the Rwandan government has been able to invest heavily in promoting the Visit Rwanda slogan out of the country, most especially amongst the European football clubs, where they are definitely sponsoring quite a number, which includes PSG and Arsenal, to ensure that the Europeans as well as other supporters worldwide get to visit Rwanda and add more foreign revenue to the country. And of course, now this year, the key players of the tourism sector very optimistic that the sector will be growing steadily, and they do believe this is the time when they will be recovering fully from the COVID-19 shocks that hit the country 2 years back. And we can definitely use this as a benchmark for Uganda's tourism anyway, after CNN earlier this year did put Uganda amongst the top global tourism destinations in the world. So we can definitely be using that chance as Uganda. Now, moving forward, fast forward, we head to the SMB international news. Now, with the international news, Chinese are returning to regular activities amid the COVID surge as they stay active in containing the spread of the virus. Some people in China's key cities of Beijing, Shanghai, and Wuhan are braving the cold and the spike in COVID-19 infections to return to regular activity, confident of a boost to the economy as more recover from infections. Now, among those who gathered to sledge or ice skate on a frozen lake in the capital of Xinshai Lake Park were some upbeat about the opening after China dropped stringent zero COVID measures on December 7th to adopt a strategy of living with the virus. However, a wave of infections has since erupted nationwide after borders have been kept all shut for 3 years amid a strict regime of lockdowns and relentless testing in all the provinces in China. Now, traffic is building again on the capital's roads as people quickly return to outdoor sites such as lakes, rivers, and the shopping malls, but business is still slow at some smaller confined places such as restaurants, according to what the owners have revealed. Now, people who had been affected were not as anxious anymore, according to a tutor of a private education training facility. China's biggest holiday, Lunar New Year, begins on January 21st this year, when the railway network is expected to carry 5.5 million passengers. China has been dealing with COVID-19 for the last 2 years. Remember, the first case of COVID-19 was reported in Wuhan. That was in late December 2019, and the spread kept on moving to the trend until there was a global lockdown. But ever since that, most of the countries have been lifting their lockdowns in their countries to contain the virus and live with it, unlike China, where the spread has been ongoing continuously. Now, in 2022, December 7th, the government in China and, of course, the President Xi Jinping did come out to reveal that they will be living with the virus as they will be heading back to containing measures because the country's economy was slowly slipping low. So that means they are looking at 2023 to see that they fast track the other issues and mitigate the effects that have clearly weakened the Chinese economy. Well, lastly, from the international scene, now the International Monetary Fund has come out to warn the world against a recession this year. Now, a third of the global economy will be in recession this year, according to the head of the International Monetary Fund, Kristalina Georgieva, did say that 2023 will be even tougher than last year, as the United States, EU, and China see their economies slow down. Now, it comes as the war in Ukraine, rising prices, higher interest rates, and the spread of COVID in China weigh on the global economy. In October, for example, the International Monetary Fund cut its global economic growth outlook for 2023. The International Monetary Fund, after cutting this economic growth outlook in 2023, that will be for October, the period of October, due to the war in Ukraine, as well as the higher interest rates as central banks around the world attempt to rein in the rising prices. Now, since China has scrapped up its zero COVID policy and started to reopen its economy, even as coronavirus infections have spread rapidly in the country, Georgieva warned that China, which is the world's second largest economy, would face a pretty difficult start to 2023. Now, the IMF is an international organization with over 190 member countries. They work together to try to stabilize the global economy. One of its key roles is to act as an early economic warning system as the year kicks off, just like now. Now, Georgieva's comments will be alarming for people around the world, not least in Asia, which endured a difficult year in 2022. Inflation has been easily rising and steadily, though, across the region, largely because of the war in Ukraine. Now, while higher interest rates have also hit households and businesses. Now, the figures released over the weekend pointed to a weakness in the Chinese economy at the end of 2022. And if you're to look at it, the downturn in the US also remains and means that there is less demand of the products that are made in China and then the other Asian countries, including Thailand and Vietnam. Higher interest rates also make borrowing even more expensive. So for both these reasons, companies may choose not to invest in expanding their crucial imports like food and energy. And then in these kinds of slowdown, a currency can lose value against those of more prosperous economies, compounding the issue even more. Now, this will impact on the higher interest rates on loans affecting economies at the government level too, especially emerging markets which may struggle to repay their debts. And that is a warning that the International Monetary Fund has got to offer. Well, do you remember so well, as the year was coming to an end, the governor of the Bank of Uganda here, Michael Ego, apparently did warn that inflation in Uganda may stretch till 2024. Simple projection. So it's not something that we will be expecting 2023 to be a smooth running year. But of course, we have to be very hopeful and optimistic. Try to lay down strategies that will be moving on, because later on in the show with our SMB Insight, we shall be getting an insight from how Uganda's economy performed in 2022 from the secretary from the permanent secretary to the treasury. He will be breaking it down for us to understand how did the sector perform? How did the economy perform in 2022? Because as we kick off 2023, we have to look back at our performance back last year and see how we can position ourselves as the country to make it out in 2023. Not going to be an easy year, trust me. But yes, we can try to cope up with the kind of situations that are available to see. Here, the International Monetary Fund has come out to warn most of those particular countries, especially the developing countries, since the largest economies in the world have as well been hit hard by the inflation pressures in 2022. Then how about those third world economies? Because here the projection is a third of the global economy will be in recession this year. Trying times ahead for the economy. Well, fuel prices are stabilizing within the country of Uganda here, as well as the East African community. But then there are lots of things that are happening, and then we have to be able to utilize this situation. We've got a lot of things coming in, salary disparities here and there. There is a digital transition in different workplaces. A lot of things are happening in most of the different economic sectors within the country. But how can you ably position yourself? Huge one, if I'm to say. But besides that, that is it for the SMB International News this morning. And of course, as we're heading out into a break, just to quickly remind you, you can follow us for more updates on our Twitter handle, Smart24TV, and then you can as well get onto the Facebook page, that is Smart24TV official. The Instagram is Smart24_TV. We are streaming live on YouTube, Smart24TV Live. Please do remember to subscribe as well. And then you can be reminded that we're on to LinkedIn. Now, for more business updates and stories, as it has been happening in real time, go onto our website, www.smart24.tv. That will be giving you a vast opportunity for you to tap into the business world, and ever challenging and trading business world. 24/7 is what we do as we continue to drive your business. Plot 42 Nile Avenue is where we are located. This year does look to be promising, but trust me, we have to be very, very ready. If you are to track down the Kampala CBD, the customers are not that as were projected at the beginning of the year. But of course, as a business person, you have to be very optimistic about how you will be juggling it through. It's not that easy because if you're to look through the fact that we've got accidents in the last 2 weeks, you as well get to realize how are you going to start off a new year where you are looking at a festive season where most traders did not make money. It actually forced others to stay at work during the festive season. So unlikely in a Ugandan context. Well, on the other hand, if you're to look at how different things are happening here, there is something to do with will President Ruto's government change Uganda's trade fortunes? Uganda is also well looking at various countries to see how they will be focusing more on recovering in 2023. So it's going to be a year of focusing on a recovery that we failed to achieve in 2022. However much the Bank of Uganda governor, Michael Ego, did reveal that inflation pressures may be heating up. And you can definitely or evidently watch this through with the fact that most of the prices of commodities available on the market are yet to decrease. So most especially those that may not be so essential. The good thing is that the essential commodities are fairly having fair prices for the business community or for the consumers out there. But then the service sector, education does return. Recently, the government was as well giving out a fees cap for different schools and institutions, of course, setting up a minimum standard for school fees and tuition for most of these particular schools. Reason being, sometimes parents find it very difficult to be able to push their students back to school due to the monetary terms. Well, the academic year does start in February. But of course, as we are moving forward, we shall be giving you more of the updates here on Smart Means Business and in our daily programming here on Smart 24 TV. When I do return after the break, we've got the business tips and the business quotes. Well, and also steadily looking at what the legislators have to say in regards to IMF warning against the recession this year. What do the legislators believe the government should do, or what the Ministry of Finance, Planning and Economic Development should do to prepare the Ugandans, or better yet, what should the Ugandan business community think of, or what are the strategies that they should lay out to at least see that they move through 2023, however hard it does look like, but to steadily move through it and not focus more on the losses, but rather onto the recovery. That and more is coming up in third hour of your daily Kickstart. This is Smart Means Business. I'm Jerome Paul Sanko. Stick around. Good morning.